In this video, we're going to talk about 8 credit card mistakes that you should avoid at all costs. Credit cards can be a valuable tool if used correctly, but they can also be very dangerous if used incorrectly. The mistakes mentioned in this video can drastically hurt your credit score and budget, so stay tuned because this video may just help you save thousands of dollars.
Wow.
The first mistake is applying for too many credit cards at once. Trust me, I know that it's tempting to go out and get all the credit cards at once. But resist the urge. When you apply for a new credit card, the card issuer usually does a hard inquiry or hard pull on your credit, which is simply a way for banks to check your credit after you submit a credit card application. A hard inquiry may sound scary, but it's really nothing to be afraid of. Hard inquiries bring down your credit score just a little bit, but they won't have much impact on your score after a few months, and after around 2 years, they'll fall off your credit report completely. Hard inquiries fall under the new credit category, which makes up 10% of your score. This new credit category is used by lenders to determine whether they think you're applying for too much new credit, since someone who is applying for a bunch of new credit cards all at once is viewed as more risky. So applying for too many credit cards at the same time leads to too many hard inquiries, which can temporarily decrease your score and cause card issuers to automatically deny your card application.
Denied.
So unless you've done your homework and you know you have a good strategy that you're confident will work, it's probably a good idea to wait around 6 to 12 months between credit card applications to be safe. The next mistake is getting the wrong card. It's important to recognize that the goal of the credit card marketers is to get you to sign up, even if the card isn't that great. So while the card offers you get in the mail or see in ads can be tempting, it's important to evaluate whether a new credit card fits your spending before applying. Since we now know that getting too many credit cards at once is a mistake, each time you apply for a new credit card, whether it's your first or your 21st, you should be selective when it comes to choosing a new credit card. Each time you apply for a new credit card, there is an opportunity cost associated with that credit card application, since there are other alternatives that you could have selected. I could go over examples here, but I think the concept is pretty straightforward. Make sure that you do your research before getting a new credit card. Some things to look for when applying for a new card, especially if you're a beginner, include no annual fee, a solid sign-up bonus, and good rewards and perks. Let me know in the comments what credit card you think is best suited for a beginner. Also note that if you're relatively new to the credit card game, it's probably a good idea to avoid cards that only offer points for one hotel chain or airline, since these cards are obviously more restrictive. Instead, look for cards with flexible points currencies, like the most popular Chase, American Express, and Citi cards. Later on, it may be worth reevaluating whether it makes sense to get a card with a more restrictive points currency. Also, as a quick word of caution, stay away from store cards. Usually you can find a normal card that offers similar benefits that can be used anywhere. The next credit card mistake is carrying a balance. Many credit card beginners will see that they can just pay the minimum payment, and so they go ahead and do that instead of paying the full statement balance. Because why not, right? I've even heard of some people who think carrying a balance helps your credit, which simply isn't true.
Lies!
In reality, carrying a balance is a grave mistake because interest will accrue on the remaining unpaid balance. This is how credit card companies make their money, and it's also a very easy way to fall into financial trouble since interest rates on credit cards are so high. Average credit card interest rates hover around 17 to 25%, which is a crazy amount of interest to pay considering interest rates for borrowing money for a house or a car are usually in the low to mid single digits. Carrying a balance and paying interest cancels out a lot of the benefits of using a credit card. So if you want to beat the credit card companies at their own game and avoid financial trouble, then you want to ensure that you're paying off your full statement balance each month. So make sure you turn on automatic payments. This next mistake is related to carrying a balance, and that mistake is not treating your credit card as cash. Many people view a credit limit as a loan that they can borrow against and pay back at a later date without really having a plan to pay off the balance. By doing this, people are spending money that they don't actually have. Instead, you should only buy something with a credit card if you have the money in the bank to pay for the thing. In fact, you should be able to pay off your credit card balances in full at any given moment. Don't get in the habit of viewing your credit limit as free money that you can borrow against and pay back whenever it's convenient, because as mentioned previously, you should avoid paying interest on your credit cards
at all costs.
I find that following a budget helps alleviate any stress that I'm overspending, because as long as I follow my budget, I know I'll have enough income from my job to cover my credit card balances each month. I have a video on budgeting, so feel free to check that out if you're interested. So the 3 key steps to treating your credit card like cash are to follow a budget, turn on automatic payments, and smash the like button for the YouTube algorithm.
What? Bro, what are you talking about, man?
The next mistake is using too much credit.
Too much.
Some people think that you can use your full credit limit without consequence, but using too much of your overall credit limit can damage your credit score. By using too much of your credit limit, you'll be increasing your credit utilization, which is simply your balance divided by your credit limit. Credit utilization makes up 30% of your score, so using too much of your credit can really tank your score. Ideally, you want to keep your credit utilization below 10%, but you should definitely try to keep it below 30%. The 2 ways to decrease your credit utilization, thereby increasing your credit score, is by either increasing your credit limit or decreasing your balance. Most banks allow you to request a credit limit increase online or by calling their customer service. However, do your homework before requesting a credit limit increase, since some banks do a hard inquiry when you request a limit increase. I like to regularly request credit limit increases to ensure my credit utilization stays low. If you're not able to get approved for a credit limit increase, or you don't want to risk getting a hard inquiry, you can simply pay down your balance more than once a month. Banks usually report credit balances to credit bureaus monthly. Also note that it isn't necessarily favorable to have a 0% credit utilization ratio, since banks and credit bureaus want to see that you're using your credit card responsibly. If your credit utilization is 0%, they'll likely assume that you're not using any credit at all. The next mistake is closing a credit card with no annual fee.
You don't want to close?
Length of credit makes up 15% of your score. Since many people start with cards that have no annual fee, these cards are usually the oldest cards that people have. So these old cards provide a solid foundation for your length of credit. Keeping old cards open also helps with overall credit utilization. Closing old cards would decrease your overall credit limit, which would increase your credit utilization percentage. It's important to note that some credit issuers will close accounts due to inactivity, so it's a good idea to use your old cards once or twice per year to ensure the accounts aren't closed by the credit card company. Also note that if you have a card with an annual fee that you want to close, you should check with the bank to see whether there is a downgrade option that allows you to keep the account open, but switch it to a card with no annual fee. This way, you're able to retain the account history. If you have a card with an annual fee that no longer fits your spending style and it doesn't have a downgrade option, then it's probably worth closing. The next mistake is using a credit card as an emergency fund. Everyone is at a different spot in their financial journey, and I realize that saving money is easier said than done, but a top financial priority should be building up an emergency fund. A lot of people lack savings to pay for emergencies. In these situations, they instead turn to a credit card to pay for the unexpected expense.
Stop it. Get some help.
But doing this is dangerous due to the high interest rates we discussed previously. So if your credit card is currently your emergency fund, you should get a real emergency fund built up
ASAP as possible. Thanks.
I have videos on both saving money and emergency funds, so feel free to check those out if you're interested. Now, the last mistake is not using credit cards at all. Many people think that it's better to pay with a debit card or cash. In some financial situations, this may make sense, but if you're responsible and organized with your finances and you have a budget that you stick to, credit cards offer a lot of benefits, including rewards, purchase protection, building credit, and more. I also really enjoy knowing that I'm beating the banks at their own game by taking advantage of all the rewards and perks that credit cards offer while never paying them interest. So despite what some people say, credit cards can be a great financial tool if used correctly. Just make sure to be responsible by having a budget and turning on automatic payments for all of your credit cards. Let us know in the comments about any other credit card mistakes that were not included in the video, and don't forget to smash the like button and subscribe for more personal finance content.